Jesus. Did I end the live stream? Did I end the live stream?
We're still here.
I'm talking about on the YouTube.
Oh, I don't know. I'm not out there.
I think I ended. It said I ended it. It said I ended the live stream. My bad. My bad, y'all. I don't know what I was messing with these hotkeys. I'll figure these hotkeys out later. I'll figure these hotkeys out later. Because I ended the live stream. Um, okay. All right. I'm gonna figure these out later. Do that. And then okay. So everybody's still on YouTube. It's just under a different live stream now. All right, got that. Got that. Okay. All right. So now I gotta go ahead. Let me go ahead and fix this. Since that's jankadank. Let me go in and fix this. Take this off. Update this. Wait a minute. It still got the. Oh, cause it's using the same. Okay, it's using the. It's using the last stream it was doing. It still got the same name. It just ain't okay. So let me put a thumbnail on there. It kept the name. Okay. It kept the name. It just didn't keep the thumbnail. So let me take this other one off. So this one here, I can delete this one here. So this one here I can delete from there. Yes, this is one I can delete. Delete forever, yes. I understand. Delete. Okay. All right. Now we cook with Crisco. What's up, Deborah? What's going on, Father Legends? Now that we cooking with Crisco, now that we cooking with Crisco, you know, now that we cooking with Crisco, let's get it started. Let's get it started here.
Tim, you still got this going on YouTube? Because not
It
loading.
it it had canceled. It had canceled and restarted a new one. It had started a new one.
Okay, that's
So
what it is.
so that link that's in you had clicked on the link that was in Discord.
No, I'm
You
actually
was
on
but
YouTube.
you was on there. Yeah, it stopped and started a new one. Let me put another link up there. Let me put another link up there cause it I had messed that up.
All right, it's working now.
Okay, you got it. Okay. Let me come here and get this. Copy this. Go there. Come to the cheapity cheap chat. In case somebody come back here later and be like, I missed it. We gonna come here. Put that in there. Did I do the right thing? Why does it have what's going on here? So now that one should go to the right thing.
Tired of starting small in the trading world? What if you could trade millions without risking your own money?
Make sure that goes
Introducing
to the right thing.
millions without risking your own money.
Yeah, that's going to the right thing. Sup, Mikhail? Sup, Mikhail? Let me see how much of a delay it is. Let me see how much of a delay it is. Oh, so like a 3-4 second delay. All right, like a 3. Got a 3-4 second delay. So y'all should be responding real fast when I talk. All right, let's get to it, man. I'm putting y'all over here to the left. I mean to the right. I'm gonna be looking to my left. So, you know, if anything be pressing on your heart, feel free to unmute in the Discord and say, hey, Tim. Or you feel free to type it in the chat, and I'll see it when I see it. Let's get to it, man. How was y'all week? How's y'all have a good week? Oh, let me close all this other. Ooh. Why is that so big? I ordered me a new MacBook. I ordered me a new MacBook yesterday, and so that should be coming. I ordered it because my other MacBook, the display had gone out on it. The display had gone out on it. So I think I'm sharing my screen on both sides. I think I'm sharing my screen on both sides. Y'all see my screen on the tube? Yes. Look like the tube sees my screen. Discord sees my screen. How y'all week? How was y'all week last week, man? Let's squanch up chart. Somebody said something about the market went up Friday. Let's look at Friday. Friday, 12 p.m. Friday, 9 a.m. It started Friday way over here. This was the start of Friday. Right there. So yes, the market went up Friday. We started here, somewhere over in this area there. Right? And we ended up there. So yes, you are correct. Who said that? Was that Marco? Yes, the market went up Friday. The market went up Friday.
Yeah, it looks like a nice secret day, huh?
Mm-hmm. Look like a nice what?
You can destroy.
Yeah, it was a lot of it looked like a lot of seek and destroy was going on. Let's check it out and see. All right. Let's check it out and see. Did we seek and destroy? We're just gonna look at New York. We ain't gonna look at everything. So let's come over here and look at New York and see what New York did. 9:30, right there. All right, so at 9:30, we opened up and we came down, wiped out sell side. Bow! Took them out. All right, then we moved back up into the imbalance. All right, God dog it. Moved back up into the imbalance. Came back down. Did not take out the sell side. God dog it. Did not take out the sell side. All right, pushed up. Failed to take the buy side. Came back to the imbalance. Pushed up. Took out the buy side. I keep doing that. Came down. Did not take out the sell. God dog it, Tim. Did not take out the sell side. So, I wouldn't say it was a seek and destroy day. It was just a high resistance run, high resistance liquidity run, right? Because on this 5-minute time frame, right, we only took the sell side one time, right there. We only took sell side one time. We took sell side here, right? And that was from 9:30 until 10:05. So the first 30 minutes, right? This first 30-minute interval right here, the opening range, we came down and took out sell side. And then we didn't take out sell side no more for the rest of the day. Right? So because we didn't take that there, right? We didn't take that, we didn't take that, we didn't take that, we didn't take that, we didn't take that. You know what I'm saying? We never took sell side for the rest of the day. Right? So it wasn't seek and destroy, it was just high resistance. Right? Seek and destroy is going to take out sell side, buy side, sell side, buy side, sell side, buy side. That's going to be your seek and destroy type profile. Right? This was just a high resistance liquidity run. Right? And it never made it back to the buy side. Right? We never made it to the buy side. Even though it was, you know what I'm saying, that's what it was drawing to, we never made it there. And we did all of this trying to get there. All right, so for me, I mean, I could be absolutely wrong, but this is what makes sense in my mind. Like the way I determine if it's a seek and destroy or a high resistance day, right? Seek and destroy, we taking out both sides constantly all day long. That's a seek and destroy day. But if we having constant retracements, right? If we got all these big retracements, but we're not taking out key levels of liquidity on both sides, then that's a high resistance day to me, right? And if you see here, we're not taking out key levels of sell side, right? We came down, took out that sell side there. That's a key level, right? And then we never, that stayed safe for the rest of the day. You see what I'm saying? That stayed safe for the rest of the day. So any smart money that bought these sell stops, this would be the ideal place for them to offload those long positions that they got into, right? We never made it there, but this low stayed safe all day, right? So a seek and destroy day, we would have poked below that, right? Then we went up, just say if we made a low there, then we would have poked below that, right? And then if we would have, you know what I'm saying, like start coming back down, right? Start coming back down, then we would have poked above a high, you know what I'm saying, and then poked below a low, just, you know what I'm saying, wiping both sides out, right? Even here, right? Could have came here, took out that high, but then turned right back around and came back and took out that low, right? Even though this low stayed safe, you know what I'm saying, you're still taking out the key levels on both sides. So
Okay, I see what you're talking about now. Thank you.
yeah. All right. Y'all hold on a second. I didn't bring my water back here with me. Alexa, turn on, lights on. Hey, what's up? When you came in?
Like just remember.
I ain't hear you come in.
Huh?
I ain't hear you come in. All right, y'all. My sweetie back now. We finna go ahead and go through this chart prep, so I can get out of here. She been going all day. I was here all alone with no one beside me. We're on a monthly chart. Right, the month just started. As y'all can see, like we talked about before, this year has not been typical from the beginning of the year. Everything that's supposed to be the worst has not been the worst. Everything that's supposed to be, you know what I'm saying, good or whatever, it just ain't been typical. Right, August did have a huge pullback, but it closed flat. Right, it was a little down. It closed a little bit down. Right, matter of fact, it closed a little bit up. Actually, August closed at flat, but it's a 0.04% for the NQ, right? September closed up 2% for the NQ, right? These right here supposed to be the worst months, right? If you're looking at intraday volatility, right? We had some huge pullbacks to the downside, but as far as on a closing basis, September closed up 2%. All right, so we had that nice reaction off of, remember the bullish order block, right? We was talking about the monthly bullish order block we was talking about. We came back down into this area here. We had the volume imbalance and the fair value gap in the order block, all that we came down into, right? And then September came back down close to mean threshold of the order block. If you just do it body to body, looking at the bulk of the volume for the month, came close to mean threshold and rallied off of it. We were saying that order block's job on the monthly basis was to push price back toward that high right there, right? So on the monthly basis, this order block has been doing its job, right? We came down, respected it in August, came down, respected it in September, right? Would not want to see it try to come back to it a third time, right? I would not want to see that. That would be showing underlying weakness to come back to it a third time. With 2 rejections like that right there, it's time to get it gone, right? With 2 rejections like this coming off that monthly order block, don't even want to see it try to make an attempt to come back to consequent encroachment of that August wick, right? Before taking out that high. If it take out that high and want to go back, whatever. But with 2 strong rejections like that right there, the monthly is showing you that it's really bullish and coming back down. That's too much. That's too much pity patting around for me. Too much pity patting around for me. All right. So order block doing its job. Let's leave that consequent encroachment on there just for a minute while we go down to the lower time frames to see what that translate to on the lower time frames. All right. Drop down to a weekly. Let's mark I'll mark the monthly. I'll mark the monthly high and low. Even though we're a mile away from the low, I'll just mark it anyway just for our higher time frame sake. Box top monthly. I hit box bottom, so we'll just drag that there. Everybody still see my screen, right? Box top monthly. Let's drop down to a weekly chart. So looking at our weekly chart, on the weekly, so on the weekly chart, last week we were watching premium and discount fair value gaps, right? We're watching both. We had one above price, right? And we had one below price. Right. One above price and one below price. Now, we went up and kissed the bottom of the SIBI, and we dug down into the BISI. Where's my freaking? All right, we went all the way to very close to the low. Right, the low of the BISI is 19.813.50, and the low of last week's candle is 19.818. So we were like almost 5 points away from the bottom. So 4.5 points away from the low. And then the high of last week was 331.75, and the low of the SIBI that was above price is 2334.25. So 2331, so that's 1, 2, 3. So 3.5 points away from the low of this, and whatever it was, 4.5 points away from the low of the BISI, right? So it's an indecision candle, right? The higher time frame is bullish, and we got a nice rejection off of this SIBI, right, and off of this bullish mitigation block over here, right. We got a bullish mitigation block there. All right, just make that a different color, right? Bullish mitigation block there. Bissy right here. I don't know if I said Bissy right there. I think I might have said SIBI, right? Bullish fair value gap, bullish mitigation block, nice rejection off of that on the weekly. All right, so I'm gonna mark it our weekly high and low. The monthly time frame is still bullish. Right. So now we've reacted off that. Still have a little bit of a SIBI left up there. That's way down there. Like I say, don't want to see it coming down there. Now on the weekly time frame, we can see that we've already respected this BISI, right? We've already respected this mitigation block, right? So we don't want to see it coming back down to disrespect that. So now really don't want to see a weekly candle trying to penetrate 20,008 and a quarter. Really don't want to see no weekly candle like just trying to rush down there. 20,008 and a quarter is consequent encroachment of last week's wick, right? Consequent encroachment of last week's wick. Really don't want to see price trying to dig down below that and drop down, right? With the bullishness of the monthly, right? You want the weekly to continue that trend. We don't have anything down here on the weekly to be trying to come back to. There's nothing there, right? There's nothing down there. Only thing down there that was on the monthly was that consequent encroachment of that wick, right? If we come back, well, yeah, that's it right there, right? Consequent encroachment of that wick. That's the only thing for the month. So there's nothing down here on the weekly for it to come back to. So you don't want to see it, right? You look at the PD arrays, you want to see support price, right? You want to see that support price, right? Don't want to see it trying to dig back down into that. Yes, we do have a volume imbalance right there that you can say, hey, price might want to come lay a body across that. Forget that. I don't want price to come back down there because the monthly time frame is bullish. If it starts to slide down there, then you pivot and be like, hey, I guess it is bearish, right? But you got to go a long way. You got to go a long way to show bearishness, right? Yes, we did have. Did we poke below that? Hey, we got below that. It's showing we below. Yep. So we did. We poked below that right there on the. I want to say on the other contract, we didn't take out that low on the other contract. On the old contract, I don't think we took out that low on the old contract. I wonder if I can still pull it up. Not letting me pull it up. Yeah, see? We didn't take it out on the old contract. Wait a minute. What did this just do? Yep, see? We didn't, the old contract, we didn't take that out. Right now. I thought so. I remember we didn't take that out. But on the new contract, it was taken. Yes. Right there. On the new contract, it was taken. That low was taken. So there's really no reason to come back down there for real for the NQ now. Right, because it was taken on this so that sell side was taken. So anybody, any smart money that went long here, right, this is the optimum place to offset those positions. All right. Now, okay, so on the weekly, we last week we pushed back up close to the low of that fair value gap. Failed to meet consequent encroachment of that wick. Right, came down, repriced the SIBI from 916. Nice rejection up, closed with the indecision candle. Now that we got that indecision candle, now we know that we got a volume imbalance here. Right, so we got a weekly volume imbalance sitting right there, and when we open up, we'll see if we get us a another volume imbalance on the top. Right, so tomorrow, if we open up, just say if we open up and the low, the candle opens, we just say here, right? The candle opens there, right? The way you would mark it is like this. That's how you would mark that imbalance right there, right? You'll just include both of the volume imbalances for that if it just opens like that right there, since it's like right there in the same proximity. All right. So for now, I'm not gonna mark anything there until we open tomorrow. Not gonna mark this volume imbalance there. Just keep an eye on. I'm gonna go down to the daily to see where this consequent encroachment falls in relations to this right here. So that's all I want to mark on the weekly. Let's look at the daily. All right, so on the daily, right, got the potential to create a BISI here, right? So again, don't want to see it trying to get down here, because now want to see this act as a bullish order block, right? And would prefer that price didn't trade back down to this area, right? The reason why I prefer price not to trade back down to this area, because if you look, well, let me ask y'all. Class participation time. Since Kim done pulled up, Kim, I'm calling on you. Kim, can you please unmute and tell me why, right? Looking at what daily candles did, can you tell me why I don't want to see price trying to come back down to this potential bullish order block, all right? And when we want to know why price did stuff, where do we look, right? We look to the left. So Kim, I'm calling on you. Speak to me. Speak, Kim. Oh, speak, Kim. Speak, Kim. Speak to me. Speak, Kim. I see you unmuted. Speak, Kim. Michelle, unmute and speak. Let me see if it's something on my end. Why I can't hear Kim.
Hello.
I hear Michelle. So speak, Kim. Speak to me. Speak, Kim. Oh, speak, Kim. Speak, Kim. Speak to me. Michelle, I'm trying. Tell me what to do. It's not letting you just talk. Is it telling you got you on put, you not on, you on put, you got to. I'm talking.
You don't have her muted on the server side, do you?
Nah. That's why I just checked. She not muted. It don't have server mute. Everybody should have the permissions to just be unmuted when they come in. Y'all don't have to like do nothing as far as like it having you on push to talk, do you? Let's see.
I have to unmute to talk.
But I'm just be able to unmute. Not I mean not
Oh,
me.
yeah.
I mean just be able to unmute.
Yeah,
'Cause sometimes
I can just unmute, but I
allow
don't see
members to
anything
talk
on
with
that
their
part.
if the permission. See right here, they yeah, it should be. It's saying you should be able to do it right there. Kim hit us with a 52 fake out. Help out, Michelle. What looking that way. right there, looking to the left. Why, when you really want to see price coming down here trying to mess around, if you want the bullishness to continue, right?
Why wouldn't I?
Yeah, why wouldn't you?
When I
Looking at
look
these,
to the left,
when you look to the
I don't.
left,
So when I look to the left, I don't see any immediate imbalances that it would be
okay,
trying to come back and get
okay,
to.
yep,
So I don't
yep,
see a reason
yep.
to come back down there.
All right, yep, there you go. There's no imbalances down here. So if there's no imbalances down here that price can look for, what does that mean about this, all of this here? Price has been what?
It's a balanced price range.
We haven't left it yet. Come on, Michelle. You know I can't spell.
No, efficient.
Yes.
So how's that different than a balanced price range?
When we leave it, once you leave it, then it's a balanced price range. While you're still there, price is just being efficiently delivered on the buy side and the sell side. So while you're still in that range, you're efficiently delivering that information. So for example, right? Using the same little area here that we're in, right? So when you look at all of this right here, right? We come here, right? Coming down, and then we come here, then we offer buy side, sell side, buy side, sell side, buy side, get up here inside this inefficiency, right? And we come all the way back up to that portion right there, right? At the mitigation block, look like we come real close to touching the order block, but right, you got bodies of candles there, right? You got bodies of candles here. You wick up inside this range right there where it's only one down closed candle, right? So you price up, then you price right back down, right? So you're offering the buy side delivery, and then you come down here and you leave this area here where you've offered buy side and sell side delivery. Now this area here is a balanced price range. So when you come back to that balanced price range, if you're bearish, you want to see it act as resistance and drop. If you're bullish, you want to see price push straight through it. And what did price do when we got here? No red candles at all in this area right here. It just cut right through this balanced price range right there. So when you leave it, now it's a balanced price range. But while you're still there, it's just being efficiently delivered with the buy side and the sell side delivery.
Okay. Thank you.
So now looking over here, like Michelle said, we don't have any imbalances down here to speak of except for this one breakaway gap, right? We got a breakaway gap way down here. Okay, so if this was a breakaway gap, right, that was price saying, I don't want to come back down here, right? I don't want to come back down here because when we look over here, there's no imbalances over there, right? Remember, this is when the smart money got long, right? That's when the smart money got long. We dropped down below that low. Smart money got long here. There's your reaction off of it, right? Traded back down by consequent encroachment, and we went up saying, I want to go higher, breaking market structure, right? Now, that stop run, that breaking market structure, your implied move is here, right? So anytime you want to trade on the side of what the market is saying, right, you should be looking for a reason to buy over here, right? That's not saying you can't sell in this area, but if you're trying to trade in the direction of what the market is saying on this side, on the right side of this line, you should be looking for reasons to buy. Why? Because you're looking for this market maker buy model to complete, right? Because we came here, we came down to a anticipatory reactionary point, and then we reversed, getting us a bullish breaking market structure. Now you're looking for, right, an opportunity to get long every time we pull back over here, right? So we leave a breakaway gap. price is saying I don't want to come down there, right? So when we leave that breakaway gap and we come back above this high, right? Now price already said I don't want to go down there. Now if we were to go back down there, we're getting a bearish break in market structure just to come back to somewhere where it said I don't want to go back to, right? Can it do that? Sure. If it's highly manipulated, sure. But if it's moving algorithmically, right, you don't want to see it come back down there. Right?
Hey, I have a question.
I got to answer.
Okay, so when you said that we had that break in market structure over there at whatever that is, yep, right there. And then we went, why did we go down so low right there at the beginning of September? If that was a bullish breaker where you just drew that line.
Because every bullish breaker ain't meant to be to keep price up. You see what I'm saying?
So it was manipulating. Was it tricking us? That was making us try to think like, oh,
yes,
we reversed and
yes,
we should be first now, but
yes.
the side.
Because if you come here, right there, that's the start of September, right? Historically, what's September? September is supposed to be the worst trading month of the year, right? So if you come in August, right? August made this big drop down, right? Come over here, right there, August, right? So for August, right? We started August, made this big drop down, and then we pushed back up, right? And we came down here and barely poked below this low down here, right? And on the old chart, we didn't even poke below this low, right? On the old contract, it didn't even get below this low. All right. So we come back up and we take out this high. Any perma bears, they looking at this as a retracement back down to go lower. Why? Because we forced people into the market coming below this low right here, right? Their stop is going to be there, trade back up, take their stop out, right? And then just to go back down. That's what, you know what I'm saying? That's what you think, because we coming into September and it's going to be horrible and we going to die off and we going to burn, right? But in reality, the only thing we did was come back down, right, into this little area here. We got this. Dog, come here, you. Right. Right. Got this little inversion fair value gap here, right? Because we came down below it, right? And then we didn't invert it there. Right. Once it became an inversion fair value gap, we didn't really, on the daily time frame, right, we didn't do much to it. But right here, once we came back down into this right here, right, and we came all the way back down there to like fool people in, it reversed back up, and we didn't, right there, we didn't quite invert it there, right? Give you that. Did we invert this one? Right. Yes, we did. We inverted that one though. That one got inverted. Right. We inverted that one here. Right. So we inverted that one there and started moving back up. But only thing we did was come back down, gave a really deep retracement to manipulate people into thinking we was going lower. Right. If you wasn't like in tune with, hey, the higher time frame. Right. Matter of fact, let's do this right here. I'm going to put this line right there for when that candle, that Friday candle closed, right? And we're going to go back up to our monthly time frame, right? Wait a minute. Let me go back to my daily. And I'm going to put, okay, that's the line. Oh, and that's, okay. So the monthly low is already there. So we're going to go to the monthly, right? Right. So the only thing we did on the monthly time frame, remember when we first started talking, was come back down to close to mean threshold of this monthly order block. Right. So since we came down to the monthly order block there, right, what you can now determine, Well, you could have, you could have, you know, thought about it or determined it before, but like on this month here, when we came down, and on this chart we poked below that low. This right here was the stop run. This right here was the retrace back to the order block. You know what I'm saying? Cause remember what I always say, like whenever price trades to an area multiple times, remember when I was like, Micah don't like us using the term mitigated and unmitigated. He said those ain't terms of his concepts, so don't use them for his concepts. If you want to use them, that's fine, but don't use them for his concepts, right? But in this case here, we came down and took stops, right? And once we came down and took stop, in this case here, we came down to the order block, right? You can say we came to the order block right here too. Yeah, we went through it, but every time price come to an area, right, just because there's a PD array there don't mean it's using that PD array, right? You have to look for the clues of what price did. Here, yeah, we went through that PD array, but we went to the low, right? Here, we came to that PD array and we stopped before we got to mean threshold, right? And got the rejection off. Right, so in this month here, when you was like, why did we trade so low? Now we can say, okay, with a thing like just looking at it on the daily chart, everything I was saying, purely speculation. Oh, we came down here, we came to this right here, we came to that, purely speculation. But when you go up to the monthly, you see with certainty we came down to a monthly order block. Boom, that's what we did. So this daily time frame in that time was retracing back down to a monthly bullish order block, right? And on the weekly, on the weekly time frame, right, it's still same things, like all kind of, you can speculate on what it did, right? You can say, hey, we came back to this fair value gap, we came back, you know what I'm saying? We came back. You can speculate all day long what you want, but for me, the answer is we came back down to the monthly order block, right? All right, so, and that's because if we look at it on the monthly time frame, right? On the monthly time frame, once we created it, right, we're still like in like we haven't traded away from it, right? We still haven't traded away from it. So when you look at this right here, this is the type of, when I said Michael teaches two versions of things being reclaimed. One is when it gets to the other side of where, like, one way of looking at reclaimed is we got a bullish order block here. And if we trade down here below it and then close down here and then come back above it, that's reclaiming it when we come back down to it there. And then reclaiming it also is how we came down there and got back above it. Right, we didn't close down there, but we came down there, got back above it, and we came back down to it again. That's another way of reclaiming that. You know what I'm saying? You don't never get to the other side. Excuse me, the other side. You stay on this side, but you just come back to it again at a later time. Right. So there you go there on why did it come down so far. Right. And if we look at that, let's look at speaking
So
of
it
so
had to
far.
go up, basically go up to the higher time frame to see what it was reacting to.
Yes.
Since on here it
And then you can
appears
just
to
go.
have blown past the bullish order block or bullish breaker.
And then if you look at that right there, old school OTE, where did we go? See that? See that? That's a question.
Oh, the 62%.
Yes, we went right to OTE. Went right to the OTE. You see what I'm saying? So
Okay. Thanks.
yeah. So whenever you see like price retracing, always remember whenever you see price displace away, especially if it takes liquidity, right? It's displacing away and it's taking out liquidity, giving you a break in market structure. It's ideal for price to come back to at least 50%. Why? Because it's coming back to fair value, right? 50% is fair value. Anything under that is a discount, right? So you want to see it at least come back to fair value, right? And then because we buy in a discount and we sell in a premium. Okay, so if you don't see price like these deep retracements, right? If you're looking for OTE, look how deep that OTE retracement is. Like if you retrace 62%, you're pulling back over half of the move. You got to think about what is OTE, right? OTE, the optimum trade entry, is anywhere between 62 and 79% retracement, right? Think about it. If you retrace 62 to 79%, you're retracing the bulk of the move, especially if you get all the way to 79%. That's like if you come all the way back down to this order block right here, right, you're coming back almost 80% of the move, right? That's a very deep retracement, and that's a very deep discount. Right. So don't be afraid of big pullbacks. You want big pullbacks when you're trying to get in the initial part of the move. But once we get farther, like up here, you don't want a pullback all the way down to here. You want the retracements to be in the range that's leaving, saying, I don't want, like when price say, I don't want to come here no more, and we make new structure, we don't want to break that structure coming back down. Right? We don't want to break that structure coming back down. And unless the higher time frame has something down there it has to get to. Right? And so
So on that leg, on that leg when you're saying we don't want to break that structure coming back down, but if it was a retracement there, like where is 50% on the current range? Would that be in that BISI? No, that would be more than 50%. It looks like it would probably be 62% again.
Talk about here?
This new leg. Yeah.
This is the new leg here. This is what we're looking at here.
Oh, it's not down there by the yellow.
Yeah, this is the breakaway gap. This is what I'm saying. This was the breakaway gap. Price already said here when we came to this BISI and went up. Price already said I don't want to go here. Right? Price already told you, I don't want to go here. So we made a new leg. So now we don't want to see price coming back into this, because if we go up, right? Remember when we went up, there's nothing on the weekly to come to, right? There's nothing on the monthly to come to. So we don't want to see the daily come back down here. Because if the daily come back down here with no reason for the higher time frame, we're getting a break in market structure on the daily for no reason that supports the higher time frame. The only time you want to see a break in market structure on, in this case, the daily is a lower time frame because we talk about monthly and weekly. The only time you want to see this daily give you a break in market structure is if this was a weekly BISI. If this, like on your weekly time, God dog it, Tim. On your weekly time frame, if this was a weekly bit, like just say right here, this was a weekly BISI, right? And then you would be looking at this price leg here, because right? Come here. Right? So we pushed up, we took out this high right there. And so now we would have a weekly BISI here. And so we would be wanting price to come back down into this weekly BISI, but we don't have a weekly BISI here. Our weekly BISI was up there, right? Our weekly BISI is up here, and we have efficiently delivered price, right? We offered buy side, right? Sell side, and we offered buy side. I'm just looking at the bodies of the candles. I ain't worried about this long wick, right? We've offered buy side and sell side here, right? And then we left that area, right? We pushed up out of that area there. So now this is a balanced price range. I don't want to see price come down below this BISI right here, because it's digging too deep into this balanced price range. You already told me, hey, this is a balanced price range, and if this is my target up there, this should support price, right? But if I start digging down into here, right, and there's no monthly imbalance down there for you to go to, we already traded down to the monthly order block, right? We took out the monthly liquidity, we traded back to the monthly order block, and then we left this area. You see what I'm saying? So now we're done down here on the monthly. Why? Because the weekly has offered sell side, buy side, and then left that area. It's agreeing with the monthly now. You see what I'm saying? The weekly came back down, right? The monthly wanted to go back down to the order block. The weekly came back down. It agreed with the monthly, right? Once the monthly hit the order block, the weekly, right, came back up, and now it has given us an inversion fair value gap, right? So we came down. We only offered buy side here, right? We offered buy side, sell side and buy side there. The only inefficient part of that right there was there. We offered the sell side, right? So now we got the buy side offered, the sell side offered, and then we push above it, right? And then we get here and we create the inversion fair value gap. Now that we created the inversion fair value gap, offer buy side, sell side, we leave that area. Now you got all this confluence of inversion fair value gap, right? Leave the area that was efficiently delivered. Now we got a balanced price range, right? Trade back down into the inefficiency right there at the top of the balanced price range, and then we respect it, right? So you don't want to see price come back down. It then got back in agreement with the higher time frame. We hit the bullish order block, right? Our target should be up here, right? We then got in line. The weekly has got in line with the monthly, right? So now on the daily, right, the weekly has no reason to come back down here. The weekly has created the inversion fair value gap over here somewhere, wherever it was, right? Let's go mark that out, right? So we have our inversion fair value gap here, right? Going to make this gray so I'll know what it is, not extended. Right. Okay, go back down to the daily. Okay, boom. All right, so now we have no reason to come down in this area. None whatsoever. Right? Why? Because the weekly is done with this. Right? The weekly is done with this. And what area is this fair value gap in down here? The area that we don't want to come down to. That's our breakaway gap. Remember we talked about that? We got a breakaway gap over here. That's the breakaway gap. Right? What is this? Oh, that was the monthly order block. Okay. All right. That's the breakaway gap, remember? Right? That's our breakaway gap that we talked about right there. We don't want to see price come back down there because that's the breakaway gap. Now we're getting the clarity behind why we say we don't want to see price come down here to that breakaway gap. The monthly time frame went back to the bullish order block, right? Respect the bullish order block. The weekly time frame created the inversion fair value gap, took out the buy side, traded back down, respected the BISI, right? So now on the daily, right, when the weekly was coming back down to, right, the BISI, right, the weekly was out of sync with the monthly, right? Why was it out of sync with the monthly? Because the monthly, right, is bullish. The monthly has I need to be on the weekly, right? The monthly has come down here, right? And then went back up, right? And got all the way up here. So here on the weekly, when it's retracing back down into this right here, it's out of sync with the monthly. Right here, when it's coming down, it's bearish, but the monthly is still bullish, right? The monthly is bullish. So when this is coming down, the monthly is bullish. The monthly already had its retracement down. Now the monthly is on its way back up. You see what I'm saying? Right? And we haven't come to anything on the monthly that's requiring us to have any type of monthly retracement. So right here, when the weekly is going down, it's out of sync with the monthly, right? You can trade down, but you're trading against the higher time frame. Okay. Then on the daily, right? When the daily is coming down, the daily and the weekly are in sync coming down, but they're out of sync with the monthly, right? They're out of sync with the monthly. And then when they come down to the weekly PD array, boom, they hit it, right? Spend a couple of days there, and then it start to push back up, right? So now that they've retraced back down to the imbalance on the weekly, right? And we've respected it. Now you definitely do not want to see the daily coming down here trading back into this, because there's no reason for the higher time frame to go down there. And if we do start to trade back down there, that's either high manipulation or we're getting ready for a reversal. You see what I'm saying? It's either high manipulation or we're getting ready for a reversal. But the thing of it is, you wouldn't know if it's truly, you know what I'm saying, a reversal until we start to get, you need more information further and further and further down. Can you trade it going down? Yeah, you can trade it going down, but you'll need information further and further down. But algorithmically, this shouldn't happen, because there's no reason for the higher time frame to come all the way back down here. It's showing you algorithmically, I don't want to go there by the signatures it left, right? So hopefully I didn't lose you on that.
No, you did not. I get it.
All right.
Thank you, sir.
Yep.
So on this time frame, that busy, wouldn't it want to come down here, grab that busy, the liquidity and that busy that you got marked off right there?
This
go
here?
higher? Yeah.
This here?
No, the bottom one, the one you
This
were.
here?
Yeah. Wouldn't it
Yep.
want to go in there to grab liquidity to go higher?
No.
No. Okay.
That because this is a daily time frame, right? This is a daily time frame, and like we said, on the monthly, right? On the monthly, right? The only thing on the monthly down here is, right, consequent encroachment of this wick, right? Consequent encroachment of this wick is inside of that fair value gap what you're talking about, right? But the thing of it is, if this is the target for the monthly, you don't want to see that strong retracement back down there, because you've already respected the order block. The order block has already done its job. We took the liquidity and then we respected the order block. Now you look down on the weekly, right? And on the weekly time frame, right, there's no imbalance to come to down here, right, at all. So on the weekly, we came down, right? This is when we came down to that monthly order block, and then we immediately reversed and traded all the way back up, right, to the high of this, what became an inversion fair value gap. And then we didn't even trade back down 50% of this candle, right? And then we created this BISI with a breakaway. It's like a breakaway, expansion. I said breakaway with an expansion candle, right? So we created an inversion fair value gap. We created a volume imbalance with an expansion candle, which created this BISI right here, right? We traded back down into it and then traded all the way back up with like a doji indecision candle, right? So since the weekly, right, this weekly now, right, when we traded above these candles right here with this week from the 23rd, right, now the algorithm is saying this is a balanced price range. I have no reason to go back down here, right? If I do come back down in here, right, I'm looking to use this as support to get back up here, because it didn't leave anything down here to come back to, right? It didn't leave no imbalances or anything to come back to on the weekly. So when we come to the daily, right, when we come to the daily, since the weekly has no reason to go down here, right, if the daily starts going down there, right, then that's why I'm like, this is some form of manipulation, or we're getting ready to go deeper down. We're getting ready to reverse. You see what I'm saying? Because there's no reason for the higher time frames to come back down here. So if the lower time frames start coming down here, then that's pointing signs to manipulation, or we're going the other way. You understand what I'm saying?
Yeah, but either way, it would still be manipulation, correct? If it's not following the signatures or
That's what I'm saying. It you wouldn't know if it's manipulation until we started going back up. You see what I'm saying? That's when you know it's manipulation. But if we just start coming down here and start breaking structure to the downside, right? You start seeing on the lower time frames before it plays out on the higher time frame, right? Because if we start coming back down here, right, you wouldn't know if it's manipulation until price. Like if we came back down here, you wouldn't know if it's manipulation until we came back above that high right there. You see what I'm saying? Because remember, right, we've traded up into a weekly SIBI and a daily SIBI, right? We've traded up into a weekly and daily SIBI, right? So price could very well want to go down. Is it going to go down there in an election year? I doubt it. You know what I'm saying? Because don't nobody want the stock market to be failing during the election year, right? But you won't know if it's manipulation if it came down here until we trade it back up here, right? And that's kind of like the sad part of the manipulation. Like once you get tricked in and tricked out, and then you be like, man, I just done got my head all bust up. I ain't gonna participate. But price shouldn't want to come get nothing from down here to answer your question. And then like the short time, it shouldn't want to come here because of what it's done on the monthly and the weekly.
okay. Thank you.
All right.
Hello?
Yes.
Oh, you can hear me now. Okay. I just wanted to see if that problem had been fixed.
Yeah, it's fixed. Yeah, welcome, Kim. Welcome to the show. Kim said, "I'm talking, man. I'm talking. You just can't hear me."
What's going on? Yeah.
We are a trade to that. Don't need that. Okay, we don't need that. All right, one day. All right, we're gonna mark out Friday's low and high. What is this right here? That's nothing. I don't know why that's there. Oh no, wait. Yeah, that. I don't know why that's there. I'll take this.
Wasn't that your when you said it was the break in market structure, and that's when I asked my question?
Oh, probably
The
was.
line you just took off. That
Yeah,
was
it probably
the
was.
bullish pressure.
Okay. All right. Probably was. Thank you. I had to move it already because when I looked at the chart, it didn't make sense. So I'm like, I don't need that. Box bottom day. All right. Box top. For anybody that's new here or don't understand why I be calling it box bottom and box top, right? Because I look at the price and like with like the box theory, right? And so the monthly box, right? That's the high of the month, the low of the month, right? And so I just look at the range of the last month, right? So this right here, if you're looking at price in a monthly stretch, this is the range of last month, right? So when you're looking at what last month did, right, we're up here at the higher end of the range, okay? And then you expecting somebody, Calandra? And then for the weekly, right, same thing. Look at the range of the last week, right? And if you got a lower part of the box and an upper part of the box, right? Seeing if you're gonna bust outside the box. Are you gonna bust through the bottom or are you gonna bust through the lid, right? Everything inside the box is internal liquidity for that time frame, right? Anything on the above the lid or below the bottom of it, that's external liquidity for that time frame, right? And then the same thing when you go down to the daily, right? The daily is inside the weekly because the weeks are inside the days. I only look at the last week as far as the box, right? The days is inside the week. I only look at the last day inside the box, right? And then the intraday time frame is inside that daily box. And then you decide on what part of that range you want to trade. Are you trading the monthly range, the weekly range, the daily range, the intraday range, right? That's how I look at it. So that's the internal, external liquidity in comparison to what price has done for the different time frames. And then on the daily, like we said before, we don't have any imbalances to speak of. So thing I'm marking is the high and the low of the daily, and then we'll peek at a 4-hour chart, and then that's as low as I go with my chart prep until I sit down in front of the chart to get ready to start trading. All right, so looking at the 4-hour time frame, same thing. Price has been very efficiently delivered in this range over here. This last price leg up there, price has been very efficiently delivered. We have repriced all the way through the high of this SIBI from the first 6 a.m. 4-hour SIBI. From the first, we've traded all the way up through the high right here with this Friday 6 a.m. candle. 6 a.m. 6 in the morning. Don't nothing happen by accident. So you got a 6 a.m. SIBI that was repriced at 6 a.m. Friday, right? And then we came back up towards the high end of it, closing well above consequent encroachment, right? That's a bullish move, right? That's a bullish move. We got a closure above consequent encroachment, so that's a bullish move for the 4-hour time frame, right? These highs right here, that weekly high, would be a likely draw on liquidity. There's nothing down here on the 4-hour for price to really draw back towards outside of this wick right here, right? Then you would just go sub 4 hours to see what we could possibly draw back down to look to suck up some liquidity, right? Go down to like a 15-minute time frame, and looking at a 15-minute time frame, we have some internal liquidity there that could possibly get taken, right? Because that's very near this 4-hour PD array. But since we offered all this buy side, sell side, and we have this, right, inversion fair value gap there, you would like to see this hold, right? This imbalance right here, you would like to see that hold and push price at least to that high right there. If not, continue up to the full terminus of that, because we are all the way over here looking at this as a market maker buy model, right? Initial consolidation came down. It's very ugly, right? And then we going back up. It's not a pretty market maker model, but right, went to came, then get back above that, right? Because since the higher time frame is bullish, right, and we're on the right side of that higher time frame market maker buy model, right? That's why I always be forming stuff in the mindset of looking for a reason to buy and go to the buy side. Look for a reason to buy and go to the buy side, because we go back up to our higher time frame. Was it a daily? Yes, it was daily. Yes. Right now. So we had the monthly, right? The monthly came down, right? If we go 2 time frames down from the monthly, right, we got our daily, right? So we'll be looking at that like this right here to get back to terminus, right? There you go, right now. And since we're on the right side, right? Since we're on the right side, be looking for reasons to, keep trying to push up into that. And that is gonna do it. That is gonna do it. What is this right here? Hold on, let me see something real quick. What is this line right here? I don't know what that is. Get out of there. All right, Michelle, I'm about to run too. That's it. I'm done, y'all. Unless y'all got something, that's it. I'm done. I'm just putting my lines to the 1 minute candle. And then I'm
All
about to
right.
be.
Thanks. Have a good night, everyone.
All right, take it easy, Michelle. Be safe. All right.
Thanks, Tim.
You're welcome. Okay, that's that. I think that was it. There's another line I need to get off now. Yeah, that's it. And then I went back and did all that, but I had my other stuff that's already in there. So let me take all this off. Midnight. Delete that, yes. Remove all that. Put this inside here. Okay, boom. All right. All right, man. I appreciate y'all for hanging out with me. Hopefully, I was able to say something that helped somebody out in some kind of way. And sorry about the little accident earlier of stopping the stream. Appreciate y'all, man. And next week, price action reviews, recaps. Price action recaps, price action reviews, they coming back. The people have voted. The people have, I'm sorry. I see it said, which third candle are you using on the right side to make that inversion fair value gap? I couldn't even, I can't remember what it was. My bad. You supposed to unmute and ask me that. So are you factoring in SMT on the highs with the ES on July, September candle? No, I ain't even look at the other ones. I ain't even look at the SMT. I be looking at SMT. I use SMT. The only reason I use SMT is to like validate my my thesis or my bias. That's what I be using the SMT for. Like if I expect price to reverse, if I expect, oh yeah, they want, I wasn't looking over there, like the message and stuff was over there. That's why I was like, y'all, I put y'all over there, so if you type something, I can't see it. But like if I'm expecting price to reverse, then I'll factor in SMT. But if I'm not expecting price to reverse, right, then the SMT, I don't really put a lot of weight on it, like, because the SMT is just showing me a cracking correlation, and the cracking correlation strengthens my thesis of, okay, we probably gonna reverse here. That's when I look at SMT. But if I'm not looking for a reversal, then I don't even go look for the SMT. That's just how I do it. And then, if it started doing something that I didn't anticipate, I'm like, okay, we broke a low, we broke a high I didn't expect us to break, right? Then I go back and look to see when we made this high or made this low, was it a SMT with one of the other indexes, and is the other index looking to dig to a higher PD array or a lower PD array? Then I'd be like, okay, you know what I'm saying, we possibly can go back here because that SMT was there, and now this index want to move there. So now this index is, either going to consolidate or, you know what I'm saying, get drug along with it, stuff like that. All right. Yeah, man, that's it. I'm about to go eat my dinner. Appreciate y'all for hanging out with me. Oh yeah, price action recaps coming back next week. I put up a poll and the people voted. Said, do you want the overnight price action or the price action recap to come back? Price action recaps won out, right? They won out. And then I said, what time would you like to do them? And 7 p.m. won out. All right, so starting next week on Monday, 7 p.m. Weeknights, Monday through Friday, unless no, except for Wednesdays. So Monday, Tuesday. Now, Monday, Tuesday, Thursday, and Friday, because I got homework review with the mentees on Wednesdays, and no mentees. We will not do a price action recap. If y'all ain't got no questions, we just ain't gonna do no stream on Wednesday night. So Monday, Tuesday, Thursday, and Friday starting next week at 7. The price action reviews for the daily price action will be coming back, because I say y'all want to do overnight or the review, and the reviews won out, because I'm like, I ain't doing both. I ain't going back to doing both, but I will go back to doing one. All right, Oakley Dokley, that's it, man. As always, I appreciate y'all. Until next time I decide to get on Al Gore's internet, share my thoughts on this thing they call price action. It's your boy Aranya Grande, aka Big Spider. You see it on the shirt, you see it behind me. Y'all be safe out here in these trading streets, man. Gone.